Hey, how you doing? And welcome to Livewire's Buy, Hold, Sell. I'm Ali Selby, and as many of you know, markets have been off to a rough start in 2022, with the S&P ASX 200 down around 7%. So which companies can help you sleep at night and weather the volatility ahead? Glad you asked. Today we're joined by Bruce Williams from Elston and Simon Conn from IML. First up, we have Cochlear, which is a global leader in implantable hearing devices and a favorite in many long-term investors' portfolios. Bruce, I might start on you. Is it a buy, hold, or sell?
It's a buy for us, Ali. We like it. It's an underpenetrated market. It's got proven benefits for its recipients. The valuation is for what we would consider reasonably high, but given its runway, the quality of what it does, its market position, we think it's a terrific stock.
Over to you, Simon. It obviously suffered during lockdowns with elective surgeries on ice, but in October, Cochlear provided a net profit guidance up 12 to 20% for FY22. So is it a buy, hold, or sell?
Look, Ali, for us, it's a great business, but it's trading at a great price. So it's clearly a sell for us. I think a lot of the good news is already embedded in the price. And I think it fits in that basket of stocks where we think it's have benefited artificially from ultra low interest rates, where investors have attributed a multiple to future earnings. So 40 times trading going towards 30 times next year's earnings. We just think there's a lot of good news already in the price, and so it's a sell for us.
Next up, we have Nine Entertainment, which has seen its share price drop around 7% since the beginning of the year. Simon, staying on you, is it a buy, hold, or sell?
Yeah, Ali, it's a buy. We still like Channel 9. It's a good business. It's diversified with its ownership of Domain, ownership and organic growth have generated its stand. So increasingly, their earnings are coming from their digital platforms. They've been very successful at growing their BVOD earnings. And ad markets fundamentally remain very robust. Metropolitan TV, or more TV broadly, remains the only form really of building brands in this country. And they're off to a great season with their ratings with the Australian Open and MAFS. So we've good management team, strong balance sheet, trades on a PE of sort of less than 15 times and a yield of 4.5%. We think it's a clear buy here. Bruce,
are you a fan of MAFS? Is Nine a buy, hold, or sell?
Not a fan of MAFS, Ali, and I don't think I've ever watched it. But for us, Nine's a hold. We think long-term structural decline in publishing and free-to-air TV is a little bit problematic for them. They are doing a terrific job flexing their cost base, and also, as Simon mentioned, the streaming services. But the streaming services are also a little bit uncertain for us because whether it's domestic content plus sport is enough to offset your Paramounts, your Disneys, the other Goliaths of streaming. Whether they'll hold that niche is a question mark for us.
Next up, we have Seek. Everyone's talking about this great resignation, but could Seek benefit as people start looking for new jobs? Bruce, staying on you, is it a buy, hold, or sell?
It's a hold for us, Ali. Seek is a terrific domestic franchise. Their offshore businesses are a little more variable in terms of their performance, but we think the valuation is just a little too high for us at these levels.
Simon, over to you. Seek recently spun out its investment business run by Andrew Bassett. Is Seek a buy, hold, or sell?
Yeah, it's a sell for us, Ali. Again, a good business, but at 40 times this year's earnings going to 30 times next year. Just again, a lot of good news priced in. I think it's susceptible to price correction given what's happening with long bonds. And we've got question marks around the valuations of that growth fund, which is about 10% of their enterprise value. Given what's happening at with these more growthy type cash burning businesses, you've got to question the valuations around that portfolio. Look, it's a good business. And we will prefer the classifieds to the pure software businesses. But again, at those multiples, it's very full.
Okay, we asked our fundies to bring along one all-star Aussie company that they think can weather the volatility ahead this year. Simon, I might start on you. What have you brought for us today?
Yeah, look, our focus is in the mid and small cap sector. So I've picked Metcash today, Ali. We think it's it's an underappreciated franchise and a business that's no doubt benefited from COVID, but I think that's delivered enduring benefits to their food business. But also their liquor business has been growing and is a very resilient business. But really it's the hardware business where they've positioned themselves as the second player in the hardware retail and wholesaling markets that we think is underappreciated by investors. Their acquisition of Total Tools looks really well priced. They bought that prior to COVID effectively on about 3.5 times EBITDA. A business that's grown very well through COVID. But we think as the franchisees and the operators in those networks reinvest in their stores with the increased profitability they've generated. We think, the local consumers are spending more in their local communities, and we think that will continue to a large extent going forward. A lot of those stores have been refurbished. And again, the hardware business, I think, can continue to do well going forward. Again, and the thing about Metcash is it's really attractively priced on 13 times and a yield of over 5% with a really strong balance sheet. For us, it looks like a standout in the market, which, where a lot of stocks look pretty fully priced.
Okay, over to you now, Bruce. Is there a sturdy and stable player that you think investors can put in the bottom drawer for 2022?
Yeah, the one we're bringing to the table today, Ali, is Amcor. It's different to Simon in terms of it's the large end of the market. It is a multinational. The basis of its business is consumer staples, so things like healthcare, food, those sorts of things. It's a packaging business that is dominant in what it does in each of the markets in which it participates. It generates excellent cash flow. It's building into its technology around sustainable and recycling packaging. So we think it's just a terrific defensive position that through a combination of capital growth, dividends, and buybacks will generate consistent returns for investors, for the foreseeable future.
Well, I hope you enjoyed that episode of Buy, Hold, Sell. If you did, why not give it a like? Remember to subscribe to our YouTube channel. We're adding new content every week.